Good day and welcome to this short video on the importance of doing periodic financial planning reviews and reviews of financial products and investments. Okay, there are, as we see it, two real driving reasons behind the importance of doing financial reviews. The first one is really all the changes that we've seen in the financial services industry and the products. You've seen particularly relating to flexibility and choice. There's a lot more transparency in modern products and solutions. But I think probably the most important of all of these considerations or changes has really been the massive change in the way fees are charged and on costs generally. And that in itself is probably the single biggest driver for most people to do reviews of their financial products and investments. I think the big thing that we've seen is there's been, over the last decade or so, a big shift away from product and direct investment, say, into unit trusts, and a switch into modern investment solutions, which are really platforms or lists, LISPs as they're more commonly known. But then, for example, we've seen an explosion in passive strategies like tracker funds and similar solutions. And all of these are just mean that the world has changed a lot, the industry's changed a lot, and it's really opportune to review whether those changes could actually be to your benefit. And of course, another big one is that the role of the advisor has changed. So the person who you had looking after your financial affairs maybe a decade or two ago, what they're doing today looks different, and possibly the person looks different. And it's important then also to consider the possibility that maybe a general review is necessary. And then, of course, the last one is that maybe 30 years ago it was really the domain of the wealthy to have managed share portfolios or direct asset portfolios, but that's become a lot more available to the man on the street. All right, so those are, let's say, the industry-inspired reasons why a review might be necessary. But also there are personal, for you as an investor, reasons why you may want to do a review. And the first one we're listing there is a change in personal circumstance. You last did your review 10 years ago. Since then, you had to retire early, or there was a retrenchment, or some life-changing event that you now need to incorporate into your planning. Of course, the changes in your financial position. You may have seen a very significant inheritance courtesy of the passing of a family member, or you might have seen the passing of a spouse. All of these factors which could radically change your current financial position relative to what you thought maybe a decade ago or 5 years ago also really needs consideration and incorporation into your financial planning. Another one that I think is really important is that your attitude to risk and return might have changed. In the next point there, we're talking about the fact that asset markets, particularly South African assets, have been very disappointing. And that means that a lot of people are sort of saying, well, was I correctly calibrated? Should I assume more risk or less risk? And again, that ties up very closely with the previous 2 points, where your personal circumstance changes and your financial circumstance changes may require a readjustment of your risk return expectations. And then finally, you may have done a bit of estate planning. You might have moved money into or out of a trust, and that may very well result in you needing to review your plan. Okay, so that's the bigger picture. If we look, for example, at retirement assets, why should you possibly consider reviewing your retirement asset position? I think the first one is that, it's always good to do a formal review every so often, just to see if you're on track, if, your retirement plans are achievable and if you're on course. But increasingly what we're seeing is through these new solutions, the opportunity to consolidate, to move, let's say, smaller holdings into a larger, more consolidated position, not only simplifies the administration, but it could help quite significantly with scale benefits, because a lot of these structures have tiered structuring in terms of the costs. And then, of course, costs are generally a lot more transparent and generally much lower if you were to be in a modern portfolio type solution as opposed to something that you might have taken out 10 or 20 years ago. The flexibility is incredible, and the systems themselves lend themselves to a lot of innovation. So, the flexibility and the choices themselves just are very much a motivating factor for a lot of people. As we said, the role of your advisor might have changed, and you might need to sort of rethink that role going forward. And then finally, once again, personal share portfolios are available in a lot of products that weren't previously available. So, go back 15 years ago, you couldn't have a personal share portfolio wrapped into a retirement annuity or a preservation fund, and those are now very doable. Right, then looking at your free capital, so that's basically your voluntary capital, everything other than retirement money. All we're saying there is that these modern solutions offer incredible choice and flexibility. So you're not limited to those old, basket risk profile type solutions that maybe existed a decade or two ago. There's a lot of innovation, things like tracker funds, which are helping to reduce the cost on portions of the portfolio, at least on the elements where trackers are useful. Another big thing is just the visibility of what you're investing in and what you can likely expect from that, as well as the transparency in terms of fees and performance. And then, as we said previously, and that's probably the single most powerful point in this presentation, is that it probably offers an incredible opportunity to significantly reduce your costs. Of course, the foreign investment allowances have been increased significantly by the South African authorities over the last decade or so, and that may itself be a very worthwhile reason to review your voluntary asset position and plan. And then finally, it's obviously useful to be able to blend funds and direct investments, and that in itself could be a strong motivator to look at doing that. All right, very quickly, we've got an example of what a modern platform would look like. So I think the first thing is modern platforms, they can hold both retirement assets and free capital assets, but not in a single solution, but on the platform. The fees are now very, very low. For 0.5% or 50 basis points, as we call it, you can get a platform with an incredible array of funds and solutions. And then other platforms, can give you platform charges, administrative platform charges of as low as 5 basis points or 0.05%. Of course, these funds, or these platforms, offer an incredible array. Each one has its own, unique offering, but generally very, very big selections of funds, be they risk profile, sort of tracker type, or underlying unit trust, for example, with be it an equity mandate or a bond mandate. So just an incredible array of funds are available on these platforms. The other big advantage that we're seeing is it's very quick and easy and cheap, if not free, to move from one fund to the other and back again. One of the big advantages of these, very, very effective administration and great reporting. And as we said, a lot of these platforms allow for the incorporation of personal share portfolios, even in the retirement space. And they were just illustrating an example. In the modern world, you might find your advisor being charged or charging 0.5%. The asset managers may be on a blended average basis coming out at, say, 0.9%. And generally, those fees have come down quite significantly, particularly when you break them up into the underlying specialist mandates. And then finally, the platform fee could be at 0.4%, but as low as 0.05%. So yeah, that's really what these modern platforms are offering. So our offer to you, or our invitation, is for an obligation-free review, whether it's of your holistic financial plan, which will be both retirement and free capital, or just a review of your retirement assets or your free capital assets. If you want us to have a look at a direct share portfolio, we'd be very happy to do that, as well as looking at the insurance products that you may have, whether they be in the form of savings or risk in the form of life and disability in your personal capacity, or possibly, things like buy and sell agreements and key man policies for your business needs. So please, the offer's there. It's obligation free. We're happy to do the review, give you our input, and that's obligation free, and generally would be free of charge as well. We thank you for your time and attention.